is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a great Wednesday morning. Let's take a look at gold. Slumping off a little bit, got below that area we talked about yesterday, and quite a few days in a row there, that 31 and 33. So just kind of sitting tight there. I actually got stopped out of a trade here, so didn't want to let it get away from me. So now it's kind of a wait and see. I'm not a big fan of being short this thing, but right now, just a little bit too far for me to not say uncle on that particular trade. And you know, a couple of things out today. The meetings on the Iran, Saudi Arabia, blah, 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 the OPEC situation. Not going so well, not looking great for tightening supplies, but you got inventories out today too. So, you know, oil, this is where we're at with the November contract of oil, and just kind of spinning around here, around this area, not a lot of direction. Talked about it possibly just kind of tightening up here until these things get resolved. And then I fully believe we're going to probably sail down into the 41.89 area. I think Yellen's speaking today. After the fact, they're going to talk about a little bit about community banking and some of the regulatory things they might need to now take a look at when it comes to situations like Wells Fargo. And thank God they're not going to give Stumpf at Wells Fargo $41 million in bonuses, I guess was the number I heard. And one of the things that and that's so sad. That's just, I hate it for that guy. 41 million. I mean, good Lord. Does that sink into anybody except, I mean, he was teed up to get that? Man, whew. I might have committed some criminal acts to get that kind of money. That's a little bit of incentive there. But again, finishing up with oil, I think you got, this is kind of a crapshoot right now. We've talked about that, but I'm a little bit more biased towards the short side. 10-year coming back down into the profile. Talked about getting into that 131, 15, 16 area, and then just sitting tight on that. We had some discrepancy in the scanner about that level on that particular time frame, so we're that's not fixed. Yeah, they protect their own. Somebody said in the den about the banking situation, but you know what? Things can all of a sudden turn. You know, then it could be hopefully a witch hunt. They just need to put some stakes in the ground, in my opinion, for some of those folks, and just, you know, you throw a couple of people in jail. And say, look, you're not going to the country club. You're going to be cast down to the sodomites. I'm just kidding. I love that line in Shawshank Redemption. I don't know if you've seen that movie, but it was kind of a cool line of fear of what prison could be like. Anyway, let's take a look. I shouldn't have mentioned that. Let's take a look at the dollar here. Still big support, 94.90, 91 is the situation on the U.S. dollar. The S&Ps, that 21.33, kind of defended that weekly unfair low this week, as you can see. And again, you never can get really too happy about being short, because there's just always some rigged situation that is going to come into play. Government intervention. This is not a free marketplace anymore. You guys know that. I'd love to hear comments on that topic if you ever want to call in about it. We could talk for months about that. Silver came back here and new relatively wide profile. That area right there I was looking at 1945 didn't hold. So again, like gold, I took a stop on silver, and new support on silver is 1850, intermediate support 1885.86. So that's the new numbers on silver. So gold and silver is kind of a wait and see now, in my opinion. Shanghai, not exactly spiking up yet, but again, that's kind of a wait and see. We looked at some China ETS, China A-shares CTFs, ETFs, excuse me. Here's copper. I really like how this is acting. I like how this is, again, getting above a recent profile here on the daily today. So kind of sticking its head up. You've got intermediate support at 217.95 right now in copper. The long-term trade, I think 226.18 could be in order there. Beans kind of doing yesterday a little bit of a dipsy-do below that 945 area. But that's kind of an interesting formation here. Just to stop, let's take a look at this in a little bit deeper sense. From a classical technical analysis standpoint, I mean, you kind of pierced these areas, a little bit of a flush there. 934 was the low yesterday on November beans, and we kind of reversed and closed back in the profile. So now coming back into this, and could get a little bit of a bounce here. Not looking for a long-term bounce here, but just a little bit of a trading situation. This was an interesting kind of finish on the highs yesterday, 953, coming back now into 947, 945. That's a big number there. So might have a little bit of a chance to be long on a contra trade now, because I like the technical action on that, and I like how didn't have any follow through, and people were sitting there ready to scoop it up on November beans. We're going to have Steve Banger on the next segment, which is going to be awesome. And we're going to, cover a couple of topics macro-wise, and looking forward to that. We're going to hit a couple of currencies while he's on, so we're going to hold off on that. And we're going to talk a little bit about the political scene and how that may be affecting things. Man, I was listening to some people talk about Greece yesterday, and I just kind of glaze over when I hear that country's name now. My eyes just kind of go dark. I'm like, who seemingly cares about that anymore? It just, over the head. I think we've got a caller. David, are you there?
John, good morning.
Hey, Dave. Hey, man. I hope you're doing well. We're getting ready to go to break. Can you hang tight here?
Certainly.
I think the music's getting ready to start, and we'll pick it up right after the break. Thanks so much for calling, though. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got Dave and Steve Banger on at the same time. Is that true, guys?
Looks that way.
Steve, you there?
Yes, sir. Can you hear me?
Oh, great. Yeah, hey, thanks. Is this called a three-way, Dave? Is that what this is called?
Well, it can be called that. I like to apply it to, other concepts
Gotcha.
involving, women. But, hey,
I'm with you.
Their own, right?
I'm with you. Steve, thanks for joining us. I thought we just all discussed this. Dave's usually got some incredible things to talk about. So, Dave, do you want to start up?
Oh, I'm going to completely disappoint you today, guys.
All right, go ahead.
A question for you. I know a tiny bit, and when I mean tiny, I mean like real tiny, almost at the electron nucleus level knowledge about TradeSoft's software, automated trading platforms with the algorithms that that company has, their proprietary
the signals.
algorithms. Yes, sir.
Yep.
Yes, sir. So, and I do mean tiny, John. I really mean tiny. But so my question is this: I caught earlier the tail end of a conversation between you and Tom earlier in the week about basically this. I'm kind of intrigued by this, the service that you guys are launching. Is the difference between just TradeSoft and what you are launching here through TFNN is that the signals, the buy and sell signals are, I would assume, obviously, are based off of the task profiles. Is that the difference between what you're offering and just TradeSoft in general?
Yeah, we've collaborated with TradeSoft, and they, it's a, kind of a team effort to provide all the information, a little bit of guidance, maybe some know-how to kind of collaborate on basically, the information relative to an algorithm generating a signal, and that's kind of where it's at. I mean, they've got a way to kind of catch some information on the TFNN site, and basically you're going to be provided some information and possibly at some point a login to view some things, and that's if you get an account open or whatever. But I'm not soliciting opening account. I'm just saying, I'm just trying to answer your question that, we've definitely done a lot of hard work here to collaborate and produce these signals. They've been going great. Tom and I talked about, a little bit of upside and a little bit of the downside of being involved with things like that. But the whole premise of it, Dave, is really, hit some singles and doubles and just try to move forward regardless of what's happening with the markets in general. And that's kind of the good news for me is, when I'm, kind of monitoring these things and making sure they're doing what they're supposed to do, it kind of takes a lot of the kind of fundamental little things that we talk about out of play and just strictly pretty much focuses on the technicals. And, we've had some market volatility. I think May 15th is when a lot of those stats started on, about 3 years worth of work. And, I look at how these things act and with the political, sometimes political unrest and OPEC and, other things going on. I mean, they just pick battles to give a signal on these 6 products. And we really kind of thought about, what would really give people some exposure to some things, that are really the highest watched kind of global instruments, in the futures container, of course, like the 10-year, the beans, the crudes of the world, the S&Ps. And so someone really wouldn't have to kind of sit there and, just kind of dig deep and do all the research on a daily basis to try to figure out where they're going to pick their battles and then do all the manual stops, targets, blah, blah, blah. And maybe somebody can go to work and kind of still take advantage of these things and not really have to be at the wheel, but also be at the same time very informed and alerted to when things are going on. So that's kind of, in a nutshell, what's going on there.
And the contracts that are being traded is, if I understand it correctly, it's beans, the notes, S&P, oil, euro, and what was the 6th one?
10-year, I believe, if you left
the
that
10-year, okay.
Yeah.
Is the euro traded through Forex, or is that on the U.S. Futures Exchange?
That's on the futures too, but we are looking at the currency also to kind of generate that signal. That was kind of one of my pet peeves on that particular product. And again, we could have put the dollar in there, but the euro I think is going to have a little bit more action, and it's just got a little bit more things that we could kind of do a little technical research on.
Yeah, sure. Well,
so,
it moves more.
Yeah,
I mean,
exactly.
the dollar, and the dollar index, as everyone well knows, is weighted in euros. I think it's like 56% anyway, so it's a pretty
Right.
close approximation. So if I understand this correctly, this is a open up, and again, I know you're not soliciting. I know there's rules in this conversation. I get that. So I'll just make a statement. A person opens an account, moves forward, needs to seed that account with a minimum of 25, I'd imagine, because of the margin requirements and different instruments you got. We may be running all instruments simultaneously on trades if the signals get hit. And essentially, you can sit back and, watch TV and let this thing do the work for you, right?
And eat popcorn, of course.
And you got to have chocolate popcorn, man. You got to have chocolate popcorn. That's critical. And okay, well, hey, John, that answers that, and I appreciate you taking the call as always, man. Thank you so much.
Thanks, Dave. Thanks for calling in.
All right, buddy. Have a good one.
Okay, thanks. All right, and it's nice to hear from Dave again. Steve?
I'm here.
Okay. While we're talking about automated systems, we've got about a minute and a half before the next break. Is it possible for you and I to talk about automated systems for a little bit?
Of course.
Okay, because I want to get into some of the macro stuff, but, you've been involved with a lot of systems, algorithms, things like that. I mean, your trading in general really relies not off of hunches and, it requires a very systematic approach. Give me the elevator pitch on algorithms and systems in your book. What would you say are the main pressure points from the good side and the bad side when it comes to systems?
I mean, obviously, people have written countless books about that. So the elevator pitch, I don't know that is really that even exists. But
I'm just kidding.
I think the most important thing is that you pick your right volatility environment, because if you start trading in a market which is just range constrained and has no volatility, You start generating signals which really don't carry you anywhere. You don't go anywhere in your position, and you don't generate any profits. And just because the market just always goes the other way, when there's no trend development, you get churned away and you start losing money. So I think
Right.
the volatility environment, the right volatility environment where you trade, is really the most important thing.
Right. So
And that is true for any market. I mean, for currencies, I'm not talking about stocks, but if the market just is range bound, doesn't go anywhere,
What's
any
the point?
trend following system will fail, and the only thing which is going to make money are counter trend systems. It's very difficult to differentiate between the two of them at any given moment in time.
True. Hey, Steve, can you hang out? We got to go to break and want to
Sure.
cover some stuff with you. Okay, cool. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Steve Banger on with us this morning. Steve, you were kind of talking about some volatility consideration, I guess, when you're kind of thinking about algorithms and when and if to even trigger something. You want to keep expounding on that, or?
Sure. Yeah.
Okay.
I mean,
Okay.
What I said before is that a trend following signal will typically not work in a low volatility environment. That is unless an uptrend has been very well established and you just kind of like swim in within that trend. But what usually happens in a very low volatility environment is that the ratio of potential win versus potential loss starts to come in. So in other words, if you have a decent volatility environment, your win-loss ratio in terms of like monetary value on the trade might be 2-to-1 or 3-to-1, which everybody's hoping for, right? Your winners should be 2 or 3 times larger than your losers. But in a low volatility environment, that is not going to work because the market will not carry the trade far enough.
Right.
So that is
Sometimes
something
it's
which
just
I
not
think,
worth putting a trade on.
yeah,
From
thank
that
you.
standpoint.
Yes, that's well put. Yes, John,
Yeah.
exactly.
And and you
I couldn't have
and
said it any better.
one of the things too, like I'm just going to use, I'm showing the Japanese yen right now, and I'm showing, I looked at the weekly here. We've covered this a zillion times in the morning here, but that, big number down below 133.34 on the yen. But one of the things you just spoke of, I mean, a lot of times, we'll look at these 240s to kind of regulate things. And right now, the boxes or the profiles themselves have really tightened up on this thing. So, and the reason I'm saying that, it kind of pairs a little bit with what you just said. Trading the so-called volatility inside the profile might not be worth it. And we've talked about this a lot. In fact, Dave and I in particular talked about this a lot of times. We've talked about this, the algorithms. A lot of times when it gets to a certain point of this kind of contraction and volatility and the profiles kind of pinch in, if you will, we're not looking to trade inside the box anymore. We're waiting for a possible breakout because, again, it's not worth it to really spend the time, energy, the money, and the low risk reward scenarios that are really presented by trading inside this kind of low volatility place. So when it does break out of, these kind of inflection points that a lot of things are geared around, we're passing on the ricochet stuff inside and waiting for like a much better high probability situation that breaks out of the scene. So, it goes directly in line with what you were talking about. So, yeah, I mean, you want to talk macro for a little bit?
Sure.
Yeah, I was sitting there thinking last night, what does Fox really want to happen here? I mean, like the network. I was thinking, okay, I don't know if Hannity's hoping for Trump to get elected because then he's going to have to defend him, and then would he be hoping that Hillary wins just because he's got more material to kind of constantly slam her with? You know what I mean? Like, this is just the crazy times, and I don't know, what really, what anybody's really hoping for in the network scene, because they want material and they want to be able to kind of, do their thing, and then, how does Trump's kind of appearance and temperament or whatever in the latest debate, I mean, how's that going to affect the markets? Obviously, the markets won't par for the course, but how much of a, like, let's just say he does the next debate's October 8th. How much impact do you think would affect the markets if Trump actually, maybe he goes through some Clockwork Orange type mechanism where they kind of upset him, and every time he gets upset, this is in training, that they kind of shock him or whatever, and maybe he kind of like stays in somewhat a little bit better control next time, and maybe he edges up in the polls. What do you think is going to happen to the markets?
I just love it when you put so many things into one question.
I know. Yeah, it's
I mean,
an hour-long show.
Yeah, because what happens to the market because of politics might be different, in my opinion, than what is going to happen to the market anyhow. So let's talk about the political ramifications first.
Okay.
I mean, obviously, the market went up yesterday, and the reaction was positive, undoubtedly, because Clinton seemed to have done better in the post-debate analysis than Trump. So the market seems to like a Clinton candidacy or a Clinton presidency better than Trump. And that I think, is the playbook for the next debate, right? I mean, if Clinton does well, the market is up, and there should be a post-debate bounce. I mean, how long it's going to last, that then leads into the second part of your loaded question, and that is, what is markets going to do in general?
Right.
Right?
Yeah, we had a lot of pieces to that question. Yeah.
Yes.
So, I mean, with the global slowdown, I guess Yellen kind of sitting on the back burner as far as whether they're ever going to raise rates and looking for any reason to seemingly not raise rates. Do you think that could carry through, that attitude? Could just kind of low rate environment, no economy really is on fire right now. I mean, do you think the low rate situation could still carry this thing north? And maybe like the Hillary kind of relief thing, that maybe she starts taking control of the polls. And do you think that's enough? Low rate environment coupled with, Hillary kind of being in the lead, maybe. Do you think that's enough to really kind of move this thing north? Or what do you think about that?
That's really the question, obviously.
Yep.
So if you look at the market and how the market is reacting to interest rate gyrations, and I don't know if you can put up an S&P chart here, but we had this fairly big...
I got it up right now.
Yeah, so we had this fairly big break about, 2.5 weeks ago, where the market really sold off and made new highs. Volatility went north of 25, and that was a pretty sizable move within the low range environment we are in. And then the Fed went to that quiet period whereby they aren't allowed to make any policy discussions 1 week prior to a Fed meeting, and the market stabilized. Yellen came out, and we got this 2-day rally in the stock market. And since then, we have been trending down for another 2 days up until yesterday, when we got that post-debate bounce after Clinton. So the long and the short of all of that is that at the end of the day, interest rates are driving this market. I really believe that. And
I think that's fair to say.
Yeah, and the fear of rising interest rates is what is going to suppress the market between now and early November. Because two things are happening early November. We have the next FOMC meeting, November 1-2, and the election November 8th. Until then, I don't think it's going to happen.
Can you stay on, or can you stay on after this? Okay, great. Guys, we'll be right back with Steve Banger.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Sorry, guys, my mic was muted. And thanks for joining us again. Steve Banger's on with us. And Steve, can I show this chart you just sent me?
Yes, please.
Okay, let me put this over here. And sorry, guys, my mic was muted there. Okay, what are we looking at here, if you can see it?
Yeah, so basically, just because we are talking about the volatility environment and the response to the Fed meeting, this is a 2-year chart of volatility, and the white bars on the bottom show the percentage change of volatility on a daily basis. And if you go back to the right of the chart, we have this one big outlier, kind of like the last big outlier, and that was a response to some Fed speak before the Fed meeting. So there was about 2.5 weeks ago when the market sold off. And as you can see, in volatility terms, that was a really big move. I mean, it's basically the third biggest move we had in volatility in the past 2 years. Yeah, right there.
Okay.
So it's a really big move in volatility. And I think it's kind of like history repeats itself. We're going to see something similar potentially running into the next Fed meeting and the election, which are both early November.
Okay. I've got a question for you. Somebody was kind of just, this is a thought to ponder here. If somebody's holding October VIX options, maybe it might be a strangle or a straddle, would it be appropriate to roll them to December? What are your thoughts on, we talked about, hey, this thing's going to get a little wild here soon again. But what are your thoughts on kind of rolling things out and just kind of staying the course?
So I think you're going to have one big volatility event between here and early November. It's kind of like the repeat of what we had 2 weeks ago. So October is not going to cut it. I think you want to be in, January calls, perhaps December, but really January, I think. January or even March is the next month, I think would be a much better bet.
Now, some of the things that you spoke of before, which were just dead on, about, just kind of buckling yourself into a volatility play because it had contracted so much. A lot of those plays kind of did what they were supposed to do, and volatility exploded. Yeah, go ahead.
Yeah, I think I've only said twice on your show to buy volatility, right? The last time that pretty much hit the volatility event we just discussed right on the head.
Right. So it's just
the other one was actually even better than that, quite honestly.
So the reason, October relative to December, January that we're talking about right now is might not be any massive impacting events going to happen anytime super soon, but at some point, it's just a waiting game, and where do you kind of hide and wait? And you're saying that, okay, go ahead.
Yeah, I mean, so if you look at the price of volatility, I think we might be going down to 12 on the VIX index, and anytime we see a 12 or 11 print, I think you are in a pretty good position to accumulate some volatility calls. And I think it's going to happen between now and perhaps the next 2 weeks, and perhaps as early as today, who knows, but because we're very close.
Right. No, we are. And, they kind of let the air out of this after the debate, too. And, markets don't seem very disturbed about anything right now. I kind of got that out of the way type scenario. Is there any strategy other than just keeping it simple and, buying?
Yeah, I mean, the other thing, which is what I like to call, well, I don't want to say conservative, but which I think is very viable, is that once volatility drops below 12, you start writing puts on volatility.
Gotcha.
Because
and then
volatility, unlike any other market, has a natural bottom. I mean, volatility in its entire life has never traded below 980, I believe. 980 was the lowest number we ever recorded.
Right.
So
I think
for volatility,
pointed that out one day for me because I was thinking it was actually lower, but yeah, I think that is the low print.
Yeah. So volatility, there's kind of like a natural bottom in volatility. So
Right.
once volatility gets towards that low end of the range, selling puts in volatilities is a fairly safe bet. I mean, you have to kind of watch out for what's being called the roll yield, because the VXX contract naturally loses ground, but you have to size it correctly. And then I think it's a fairly low risk, high reward setup.
Yeah. So let me ask you this: considering that volatility never seems to, I mean, unless we're way up there in the stratosphere, never seems to really spike down super hard, especially at these levels that we're speaking about, the 980 being the low print there. But is there enough down there to warrant the risk selling those puts? And is there a way to even like do a credit spread on those puts? Is it even worth it to try to or is there enough kind of play wiggle room there to get out of those things if you're wrong, or what's the story there?
Well, I mean, you can always do a ratio spread, whereby you buy at the money volatility puts and sell out of the money, and the out of the money pay for your at the money. And then because the VXX has what's being called a negative roll yield, as of right now, that contract's going to lose about 8% per month. If I haven't looked lately, but it's about 8% per month. So your in-the-money puts should actually start making you money, and the out-of-the-money puts should expire worthless. So in combination of those two things, it's I consider that to be a very, very good trade.
Is there any reasons to think, like just based on what you just said about October versus December, January? Is there any reasons to think about a calendar spread on something like this at all? Like selling?
Yeah, I mean, I actually think that one of the trades I use to actually be long volatility and not really have the premium expense is I actually buy out of the money calls, December, January calls, and sell closer to the I sell out of the money calls in a closer months.
Right. I like that.
Credit out of the shorter duration calls pay for the decay out of the money calls, and the ratio to be used is about 2-to-1. So my ratio of shorter duration calls versus longer duration calls is 1-to-2. And
so if it gets away with you, it kind of like also covers,
you make more money on the upside.
Okay.
But in the meantime, when it churns away, you're not going to lose money on the decay out of the long calls.
That seems like a relatively decent situation to get into, especially considering what we just spoke of. Yeah.
Yes, it is.
That's awesome.
I would agree that is a pretty good trade.
Awesome. Well, listen, Steve, thanks for coming on today, and thanks for that insight. We're going to go to our last segment here in just a bit, but appreciate your time this morning, and always good to talk to you, my friend.
The honor was all mine.
We'll catch you later. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. It was awesome to have Dave on earlier, asking about the signals that we spent just ungodly amounts of time on. And Steve Banger, of course, always a pleasure to have him on. Got beans up again here. I've been pretty bearish on beans. We kind of got that little flush yesterday, but the reversal is concerning on a short-term basis. Still think these are headed down long-term, but again, this kind of reversal coming back into that 945 area. We've reached the low this morning, 946. We might get a little bit of a contra, a little bounce here, so keep an eye on that one. This is all indicated in the scanner. It will show bottom on the daily there on beans, and your upside targets on this one would be 64 if you're going to do that long trade. But again, I think you're trading against the long-term trend down here. This is kind of the macro step back and get out of the noise weeds and kind of understand what's happening here. So 964 is really still that major situation on beans. Crude, we talked about, this is, I think, just stay away from it right now. I think you're going to get chopped up. The S&Ps, breath got a little positive here, 2149, 2150. Now it's going to be a supportive situation here on the S&Ps. Got some bad news out of the way. The VIX is kind of crunched in a little bit. Steve's was pointing that out. When we get into these areas, a lot of times it's really, really difficult to again, to step back and really kind of be patient and wait for these things to happen that are the great long-term setups. And what he was speaking of is, hey, when the VIX is floating around 17, 16, all that, when we get down into the 12s of the world on that particular trade, then you've got a historic, decent little situation to look at. And also combined with a little bit of a timing situation on the October, and JB asked some really good questions on that. Maybe that calendar ratio spread's appropriate here, because you might not want to miss the boat, but also you might have a time frame here that you could scoop up some points in the meantime to cover, the cost of that impending explosion that may happen, I guess. So great information this morning, and good questions from Dave earlier. Let's take a look at the XLF here, because this thing was kind of sitting right at support yesterday, and I was keeping my eye on it. Here's the weekly. I'm not terribly excited about being long the banks or the financials in general right now, but again, you can kind of see what's happened recently, but that 1905, a little bit of support situation there, but these banks are not going to want to hear about problems in the banking industry, possibly new regulations, and also a narrowing yield curve that just never seems to go away. So again, Yellen and her crew are day trading the latest stats, slanted towards, God, I hope we don't have to ever do anything. That's just the attitude they have, and nobody wants to stop the party of low rates and the market's possibility of loving those low rates. So that's kind of where it stands, and rates and politics is kind of where it's happening right now, and Hillary's kind of the ease of mind side of the equation on that, and market's kind of told everybody that that's the way it's looking at it. Guys, you've been great. Keep the questions coming on a daily basis. Those are great. Everybody can learn from them, and even JB mentioned something in the den about that particular strategy and the VIX in those different months. I think everybody can get some use out of questions like that when we try to answer them. Guys, you've been great. Stay tuned for Larry. You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.